Hello and welcome back. You're watching this special live broadcast brought to you by CNBC Africa and the Progressive Business Forum. We've been listening to Rob Davies, the Trade and Industry Minister, speak about some of the key tenets of the African National Congress's last elective conference resolutions on trade and industry policy. Minister, let me come in here. The concept of industrialization is not uncontested within the ruling party and within the alliance. The African National Congress has taken quite a decisive step in policy terms to say that industrialization is back on the agenda. But of course, there are quite a lot of impediments, one of which is, of course, whether you have a resourced industrial policy. Many officials complain that Treasury, who perhaps have a different view, sometimes starve the initiatives of finances. How do you interact with this inbuilt tension within the alliance and ensure that you get maximum resources for the policy?
Well, I'm not sure that the tensions are within the alliance. I think that there is a way in which, in the society as a whole, we have not come down, as I think other more successful emerging economies have done so, and said that the way forward is through the productive sectors. I think that quite often many commentators, experts, people think there needs to be a balance between consumption and production and so on and so forth, and that when decisions are made about this or that, we don't necessarily come down strongly in favor of production. I think that's the challenge. Now, as I said, I think that other countries who are more successful don't have those angsts that we seem to have. But also the fact of the matter is that when the economy grew for the longest period of uninterrupted growth at any time since the Second World War and the period immediately before the onset of the Great Recession, the fact of the matter is that our consumption-driven sectors grew twice as fast as our production sectors. And that's a serious imbalance. And I think that we can see now the chickens are beginning to come home to roost. We cannot sustain a balance of trade deficit like we've got. We cannot sustain a level of debt among consumers, fueling consumption of the levels that we have. We've got to boost our productive sectors.
But Minister, can I come in here? There have been concerns that the kind of assistance that you want to give the manufacturing sector is being hampered by other kind of policy initiatives that are not necessarily on course. If one takes, for example, the question of pricing around electricity, many sectors or industries are complaining that the way in which the electricity question in South Africa is being approached is out of sync with what needs to happen in terms of your industrial plan. At this policy conference of the ANC, how are you going to allow different elements to begin to talk to each other so that you are all on the same page?
Well, I think that we are going to have to address the contradictions in a way. From we need to invest in the production of energy. We've already done that in Medupi and Kusile, but at the same time, the consequences of paying for that could have detrimental effects on productive sectors. I mean, our voice has been raised in that discussion. I think the voice of manufacturers, of other productive sectors, will be raised in the public discussions over the price proposals which are coming forward. But I think that however that works out, and I think we would like to see some way in which the impact on manufacturing could be cushioned. We would definitely like to see that. But however that works out, I think that what we've got to realize is that we no longer have the basis as we had before of holding out cheap electricity as a competitive advantage for manufacturing in South Africa. It's not going to be like that. In fact, I think that electricity prices is becoming neutral to negative as a factor in terms of South Africa as a manufacturing destination. And that means we've got to find what is the competitive advantage. And I think it's going to be around access to the primary products, mineral products. We've got to have mineral products be made available at prices which support downstream manufacturing. We've got to have agro-processing industries driven by production of foodstuffs and food products in our economy. I think those are going to be the challenges as we move ahead, because we do need to industrialize. We do need to continue to industrialize. If we deindustrialize, I think our future is going to be a lot bleaker as we move forward.
But a lot of people argue that industrialization in many ways is just protectionism by another name, and that it keeps, the country isolated. It doesn't create a climate for investment. How do you deal with perceptions that the policy of industrialization is in fact protectionism rather than a stimulus, or rather than an invite for people to come here?
Well, I think that first of all, there's the 19th century German economist Friedrich List, who talked about kicking away the ladders. That once you get up to the top of the ladder, you kick away the ladder and you prescribe to people something completely different from what you yourselves did as you were industrializing. And I think that policy space and the right for policy space to be accorded to developing countries is something we will continue to fight for. That doesn't mean that what we're looking for is unbridled protectionism. In fact, we have said in tariff setting policy, we have neither an a priori high or low tariff approach. We want an approach where we look at the particular circumstances and take a decision based on evidence. And in some cases that has led us to actually lower tariffs, where we find that there are upstream industries which are important price factors in downstream, more labor-intensive industries. We have removed tariff protection on some of those. But where there is a case made where a sector is either vulnerable or a sector could make headway if it has some tariff protection, and we have tariff room under the WTO rules, we have made some adjustments of that sort. And I think that, in fact, our overall average tariff is a lot lower than comparable emerging economies. And that's the reality that we have to grapple with. But it's by no means the major or most important form of support for industrialization that we think we need to put forward as a country. In fact, I think access to finance is the most important one. And access to finance doesn't just mean on budget. It means that we need to learn the lessons of other emerging economies. For example, in our IPAP, we've just compared ourselves to Brazil, where an institution like the Banco Nacional de Desenvolvimento Econômico Social, the equivalent of the DBSA and the IDC, has a much stronger presence in terms of industrial financing. It's able to offer a larger quantum of industrial financing at lower rates of interest than in South Africa, even though the interest rates in Brazil are higher than those in South Africa. And we've been trying to make some attempts to restructure some of our institutions more in line with those. We've released 100 billion odd rands worth of additional finance to support various industrial initiatives.
Now, what about the questions around how commercial banks and finance institutions come in here? There is the tendency, because manufacturing is not a quick yielding sector, that there's reluctance on the part of financial institutions to actually make monies available. What kind of discussions are you involved in with the financial sector to try and come on board around some of the initiatives that you've put in place in the manufacturing sector?
Well, I think the first point I'd make is the point I was making just now, is that we've seen that successful manufacturing emerging economies have all got strong development finance institutions. They don't rely on commercial banks for finance for productive activities. But having said that, I think we would like to see some important changes. There's an old adage that it's actually easier to borrow money from a bank to buy a car than to start a small business. So I think some of the initiatives have involved, for example, in the financial sector charter. There are specific commitments around making available resources for SMME development, housing, financing, that sort of gap between RDP houses and others who get in bonds and so on. We have been quite active in the agency that reports to us, the National Credit Regulator, in trying to dampen down this over-exuberance of unsecured lending supporting consumption growth. I think all of these are things that we would like to see the banks becoming more serious players, but I don't think we're counting on it. We're looking to the development finance institutions and the strengthening of those.
Minister, let me come in here. The question of development finance institution is a big, contentious issue. You've merged Kula and Insika into the new agency called SIFA, but we haven't heard any kind of strategy strategy from CIFA to date. I mean, what exactly are they planning to do, and what are the timelines? Because many small businesses have had huge complaints with Kula and Nsika. Are those problems going to be following the institution to the new agency that you have put together? Because we haven't really gotten a game plan from them.
Well, in fact, there is an additional quantum of resources, and one of the things is that by merging the entities, all the overhead costs have been reduced. But I think that the issue about small business development is not just about access to finance. What we've done in our neck of the woods, CEDA, Small Enterprise Development Agency, is we've looked through the SMME program and said, well, we're operating on a very, very broad front. We're not making sufficient impact, but what has actually worked? What is consistent with where we want to go? And we've identified that some of the programs which do make more sense are some of the incubation programs, where you get a group of people together, they have access to means of production, they work with bigger players in a particular sector, there's mentoring, there's training, and all of that. And that is where you start to develop productive entrepreneurs. And that's what we're looking to do. We've already set a target that we should double the number. We've only got 30 in South Africa at the moment recognized. That should be 60 in the next few years, with an eventual target of 250. And we think that it's part of trying to shift, I think, from either entrepreneurs of necessity or this term tenderpreneurs, where people are in any business as long as there's a government tender, to actually people who become real entrepreneurs, real players in the real economy. And the refinements to the codes in the BEE, we're saying we've already had you can already earn points if you're involved in this, but we find too few big companies are involved in this. And so we're now starting to turn around and say, well, there'll be a sub-minimum. If you don't play in this space, don't call yourself a big contributor to BEE. We want to create the kind of symbiotic relationship between big and small economies or enterprises that we see in successful manufacturing economies in Asia, principally.
Well, Minister, thank you so much. We will have to leave it there for our television audiences. That was today's special breakfast brought to you by CNBC Africa, of course, with the Progressive Business Forum. Please tune in tomorrow morning again when we look at the input from Finance Minister Pravin Gordhan, who will be taking us through some of the critical issues being debated here at the African National Congress's 53rd elective conference in Manguang in Bloemfontein.